From the up-and-coming actors to the veterans like myself, the Foundation is here to help all of us.
As fellow artists, we've all been there. It's crucial that we remember where we came from and help out however we can.
For over 25 years, the SAG Foundation has been the industry's best-kept secret, and we're out to change that.
As natural storytellers, it's great that we have the opportunity to give back through the Children's Literacy Program.
A disaster like Sandy really brings it home with how crucial the SAG Foundation is. Their donation drive helped so many people in need.
The seminars and workshops are crucial. Working together is what makes us better.
The SAG Foundation is a nonprofit organization that relies solely on donations to keep these important programs free for everyone.
The SAG Foundation can't do it alone. We need you.
If you need help, ask.
If you can help, give.
We're all in this together.
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 Together, everyone benefits.
Join the cause.
Act now.
How'd you like the new promo video? Nice? You guys like that? Yeah. Welcome again to our people in-house and also to our live stream viewers across the country. Thanks for tuning in. Again, my name is Dennis Baker. I'm the Life Raft Program Director here at the SAG Foundation. We have an exciting evening tonight in store for you. A couple of things information-wise. I'm getting some nice music coming my way. Thank you, ladies and gentlemen. Not quite. I'm not quite a singer. How are we doing with that music? We good? Now, here we go. Okay, we're gonna get this figured out. Social media, we are on Twitter at SAG Foundation. We are at youtube.com/SAG Foundation. And we are on Facebook, facebook.com/SAG Foundation. Please check those places out. Subscribe to the YouTube channel because all the videos are on there are from the live streams and conversations, things like that. Sometimes we'll post things on Twitter and Facebook before the emails go out, and as many as you know, those emails, once those go out, things get signed up and filled up fast, so you might want to be checking those things out. Last thing I want to talk about is this idea that we are a nonprofit. That means we do not get your dues or initiation fees when you become a SAG-AFTRA member. Let me repeat that. We do not get your initiation fees or your dues. It is purely on grants and donations. And some of the organizations that give us those grants came and challenged us and said, we want to see that more of your members are actually taking ownership and giving back. It's great that they're participating, but we need them to take ownership and help out as well to show that they really are making this their place. So a couple things we're doing this evening. One, to your right, there's a little box right there, a little donation box that we have. If you have a couple dollars, please drop them in there. I get it if you don't have cash. I don't always have cash. On the website, there's a donate button to the right of the page. Be a sustaining member. Things to think about is each seat an event costs us $16. So we have between 20 and 28 events a month. So think about how many events you go to and how much that's adding up. And also think about, is that worth $5 a month? Is that worth $10 a month? Maybe $1 a month. Whatever you give, I guarantee is going to be the best deal in town compared to some other stuff that's going on. So please think about giving something. Also think of it this way. Things like Superstorm Sandy. We have assistance relief to help people pay bills. Some of the money that you give helps with that. So you may actually be helping someone next to you when you give. So think about it that way. Thank you for your time. Thank you for watching. Thanks for being here. And without further ado, Chuck Sloan.
Cool. First of all, is tax deductible. Very important for you to remember about this time of year. And I'm not going to get into what is tax deductible or what isn't. Today we get to talk about audits. Before I get to audits, I want to explain I'm dressed very casually, and the reason for that is because when I first started doing taxes for my friends who were their actors, I wore a suit and tie, and suddenly they'd get scared they were coming in to do their taxes, and I realized this wasn't working. So at my office, where we deal primarily with actors, we're very casual. So forgive that. You're not going to see me in a suit. That's the difference between me and, shall we say, most other preparers out there. I'm particularly thrilled with how they represent tax preparers with those H&R Block commercials. Aren't they great people? Sorry if you're one of them, but you are. Yeah, that's right. We've all auditioned for those. Anyway, hi, we're here to talk about audits tonight. And arguably, audit and the IRS are the two most feared words in the English language, at least in America. And the IRS loves it that way. They want you to be afraid of an audit, to live in fear. And I'm saying, don't be afraid. Now, you may know you have a legitimate reason to be afraid because you know you may not have done your taxes as well as you should have or backed them up as well as you should have. But quite honestly, if I push this button, I should be going ahead. I should be going ahead. I'm not going ahead. Audits. That's my main sheet. If you've kept all of your receipts, let me clarify this before we go further. I'm going to go through this presentation relatively quickly, and then I'm going to open myself up to questions. I've done a lot of speaking here at the Guild, and I have a tendency at that time to just answer questions as we hit a particular subject. But in this case, let me get through it because I may very well answer some of your questions in the presentation and prompt questions as we go. All right? So, if you've kept all of your receipts, records, credit card transactions, and deposits throughout the year, and by that I mean deposits into your checking account. If you've deposited money, the IRS can find that out by simply saying we'd like a list of your deposits. So make sure you bear in mind, if you deposit the money, you better be reporting the money. If you've totaled all of those amounts, sat down, and I'm going to tell you, it'll take you 4, 6, 8 hours, maybe a little more, to sit down and go through all of those receipts. And if you have what I call a tax preparation worksheet that breaks down the allowable deductions, how much is for home mortgage interest, how much is for taxes, real estate taxes, how much did you give to charity such as a foundation, how much did you give in goods such as Goodwill, Salvation Army type of thing, and then of course the actor side, a list of all the possible actor deductions. If you've had one of those sheets and you've filled it out meticulously, and then presumably that's been given to you by one of your preparer, then are you sure that your preparer is following the IRS regulations as to what is and isn't deductible? There are lots and lots of preparers out there that don't have a clue what actors can write off. In some cases you can say they don't have a clue what some people can write off. Oregon and California are the only 2 states that actually have any regulation over tax preparers. New York was going to put regulation in. By that I mean you have to pass a test to have a minimum understanding, and then you had to keep up with a minimum understanding. But the IRS then instituted a program where they decided they were going to have registered tax preparers. And you had to pass that test, and you had to have passed it by the end of this year to be able to continue doing tax returns. Well, apparently some people decided the IRS shouldn't have that authority, and they sued the IRS. And about a month and a half ago, the IRS was told by a court you can't have a test to make sure that people who are preparing tax returns know what they're doing. It sounds silly, but the reason I'm saying this is because you better be aware that just because you're going to a preparer doesn't necessarily mean they know how to prepare the taxes by all the rules. People have an idea that CPAs know about taxes, and in theory they do. But CPAs are accountants, not necessarily full-time tax preparers. We've seen all sorts of mistakes from CPAs who believe that this is deductible for an actor or this is deductible for an actor, or will tell actors, you didn't make enough money as an actor to be able to write off your expenses. So keep in mind that who you go to is very, very important, and they need to know what is and isn't deductible under IRS rules. Sorry, there's a thing up here I'm supposed to follow. We're back to where I was, and I haven't left. Yeah, we're still there. I'm hitting the right button. We're going to say hello. I'm not sure what my next cue is. I wrote this 2 weeks ago, and it's a busy, we're kind of busy right now. Oregon and California does have rules as to who's allowed to. If I sign your tax return as a preparer in California, I can be sued $5,000 or the state can come after me at $5,000 or $500 for every return I sign if I'm not registered with the state of California. Oregon has, I'm sure, a similar situation, but throughout the rest of the country, that's not the case. Now we're getting into the questions I said we were going to get away from. Go ahead, real quick.
Sorry. No, I was just going to say, I mean, what if we do them ourselves?
If you do them yourselves, you probably don't have to pass a test. Okay. That's one of the reasons the people in the rest of the country said, well, wait a minute here. But the argument is, if you're paying someone to do your taxes, don't you think they should know what they're doing before they take your money? And if they sign the return, they're supposed to be registered with the IRS. All right? We're on the next page. Now, remember where we were, that your preparer knew what was and wasn't deductible. If you made sure then that you've received all of the tax forms, and this is a recurring problem, and particularly huge with actors who have sometimes 10, 16, 24. Our record, I think, at the office is 56 W-2s for one performer. It's hard enough to know that you've gotten all the forms, and then you have a company like Entertainment Partners who writes a bunch of checks out as Entertainment Partners, but then you might get 5 or 6 different W-2s from variations of different companies with, it's not Talent Partners, Entertainment Partners. All right? So it's your job to know who you're expecting all the W-2s and other tax forms from. We'll get into 1099s. In all too many instances, when you work for somebody and you have made at least $600 with that person or that company, they're supposed to send you a 1099, miscellaneous. They don't always do so. Sometimes they send them late, and you've already filed your tax return. Sometimes you were told they're not going to give you a 1099, and miraculously that money was never deposited into your account, so you didn't report it, supposedly, and then all of a sudden the IRS has a copy of it, but you don't. We'll get into that later. So your job is to make sure you know who paid you, how much they paid you, and again, it's not the rule, but if you deposit it into your account, you better count on the fact that the IRS can get access to that. Again, that's the next line. If you've compared your check stubs against the tax forms, and you've made sure that what those W-2s and 1099s say are accurate numbers. All too many times they're wrong. All too many times you'll get a 1099 or a W-2 for a company you didn't work for. Now, how can that happen? In the old days, when you auditioned in LA, you filled out your name on a card and your address and your social security. You gave them all the information that was necessary for someone to basically have an identity theft situation with you. It's not that problem so much anymore to a long way, but you never know when you go on the set, you're filling out a contract and you're filling out the tax form, who that AD is, or who the assistant AD is, or the assistant to the assistant AD is, who's a friend of somebody. I'm not saying to be frightened, but keep an eye on it, because ID theft is a huge issue now with the IRS. We've had 6 cases last year in our office of where we've tried to file a return and people are told we can't file it, somebody else has already filed a return with that name and that social security number. In one case, I did a return for somebody, filed it right in front of them. It bounced back overnight, and I was told that he was dead. Now, really what happening is the IRS had just simply killed that account unless you put in a specific code, and he had forgotten to tell me that he had this ID problem, so therefore I needed to put the code in. So that's how the IRS is dealing with it. We had a gentleman that came in who had done a show in Florida. We couldn't file him, so I called our company. We send our returns to a middle company, and that middle company sends them on to the IRS. So we called the middle company to find out what was going on, and the person on the other line said, do you have an office in Florida? We said, no. Oh, well, someone filed a return in Florida for, a rather significant refund. And what they're doing is they're just making up companies that supposedly paid this person, and they're walking away with the money, and then the person who is the actual filer is in trouble. So be careful. ID theft as far as taxes go is a big thing. So again, going back to where we are, make sure that the tax forms you get are valid, that you work for those companies, that you know who they are, and too often, just a little of a button can send you a 1099 or a W-2 that really wasn't your issue. So make sure the numbers are correct. How? Keep your check stubs. Keep your check stubs. If somebody gives you a check and you don't have a stub on it, make a copy of it so you can keep it. Now, the next point is, are you certain that your preparer is someone who understands what the IRS allows for actors? We've touched on that already, but it's really important. Are you certain that your preparer does not build upon your numbers? Now, hopefully, as I said, you've sat down and you've filled out the form and you've used your genuine receipts and records to come up with the actual numbers. But there are a lot of preparers out there that want to be your friend, that want to make sure you get a refund, want to make sure you get a big refund, or that you don't owe as much perhaps as you should, and so they have a tendency to build on your numbers. Went to an audit once with a young lady who had spent $360 in acting classes for the year. The preparer put down $3,600. All right, and did that in many, many, many areas. So be careful. Another young lady came into the office and said that the first question she said was, "Are you guys respectable preparers?" Well, I'd like to think I am. I said, "Why do you ask?" She goes, "Well, the first year I was here in town," and she's the sweet little innocent model type, maybe has been here 2 years. She said, "Well, I went in to get my taxes done, and about 6 months later, the IRS sent a letter to everybody that the preparer had done taxes for, and had said, we're auditing everybody. You have it, you can come in and get an audit done with your records and such if you'd like, or just pay this amount. We urge you to consult another tax preparer other than the one you went to make sure whether or not you should get audited." So she went to the other preparer and said, should I go in and get audited? And the preparer said, well, dear, did you buy this boat? A boat? 21 years old, just fresh from Idaho, Miss Potato Queen, buy a boat? You're laughing, but that's what these people will sometimes put down. You're not paying any attention. You only care, do I owe money or do I get a refund, and if so, how big? We have people come into our office all the time. My refund was so much bigger last year. Why? Without trying to go too far, well, your preparer lied. Did you really have 15,000 business miles last year on your car? You've only written down 3,200 this year. What happened? He put down 15,000 miles? Because you're not paying attention, you don't know. So keep an eye on that. Now, the next aspect of it is, and this is kind of important, know that your preparer has filled out the tax return properly so it doesn't call attention to your return. It's a standard statement in our office. We want to make sure that we don't give the IRS a single reason to ever look at your tax return. Because the truth is there are too many people at the IRS who don't have a clue about actors, don't have a clue about actor deductions, and it's very difficult to see an actor that made $35,000 total income writing off $12,000 to $15,000 in expenses. How could that possibly be real? So as a result, you're invited to come in for an audit. Well, it turns out you're paying 25% in many instances of your gross income to an agent and a manager. So right off the top, $7,000, $8,000 of that money went to an agent and a manager. Then you've got classes. There are places in LA that are $350, $360 a month. That's another $3,000, $4,000. Then you've got mileage if you live in LA or where you drive your own car. In Florida, we had a gentleman come in one day. He'd driven the car 12,000 miles going up and down the length of Florida trying to get work. He validated every bit of it, but the auditor didn't believe it. He had to go out and get additional proof. So mileage is a huge deduction. That would arguably in today's world be more than $4,000 more. I just covered, I think, $15,000, $16,000. Then the question becomes, how did you live? And that'll come up later in the discussion. But anyhow, if you've made sure all of these steps are right, then you have nothing to worry about, no reason to fear an audit. Now, does that make you feel a lot better? No, you understand the principle, but we're saying keep an eye on your tax return. And here's why, and as I said earlier, because performers have extensive miscellaneous deductions, and they're usually placed on what's called a Schedule C or a Form 2106. Don't go crazy with these notes. Who cares what the form is? Listen to the principle. You're going to write off a heck of a lot of deductions that are absolutely valid, hopefully. And just because of that, the IRS may say, we'd like to see you. Come on in. Even if you're right, and I'll keep saying this throughout the evening, even if you're right, you really don't want to be audited. It's just a pain in the neck. It's like having to go, excuse me, dentists out there, it's like having to go to the dentist's. You know what the person's going to do is really good for you. And if you follow the direction, you're going to be fine. But you don't want to go. So even if you've got everything in order and you're ready to go and you just have to pick up your box and go to the IRS, you're still going to have what I call the weight of the world on your shoulders for the next 2 or 3 weeks after you've gotten this letter. You're going to be afraid of an audit. You're then going to go in and meet with the IRS. And again, even if you walk away free, you may feel wonderful, but you just wasted 3 weeks of angst preparing for the audit. And if you don't have your records in order, you've just spent 3 or more weeks trying to get all the records that you may have reported, but you didn't keep. Odds increase when a taxpayer uses a Schedule C or a 2106. Actors use either or, and all too often, both. I'm a masseuse and an actress. Give me some occupations. Cater waiter. And I get paid on 1099s, so I'm going to have a Schedule C. And I'm an actor, then I get paid on W-2. So you'll have expenses on both. Are you with me? That increases your chances of an audit. Here are some real numbers from the IRS. In 2009, taxpayers filed 143 individual tax returns. We're not including the corporate and employment income tax returns. Don't worry about employment income tax returns. Those are something most of you will never have to worry about. And of that total, it's claiming that 1 million, almost 600,000 returns were examined by the IRS. It says 1.1 of, then it says 16 million of those 142 million used a Form 2106 to report their expenses. That's almost always one of you. And of the 16 million, it says only 190,000, but you see 1.2% were contacted. So already the odds have gone up just in using a 2106. Obviously, it's a higher amount than the average. So I'm going to tell you, though, that the odds of getting audited are 1.2%. But I'm going to say they're actually higher because actors have high miscellaneous deductions. Salesmen will use a 2106 to report some expenses that they incur when they're out on the road. But they're not going to be $15,000 on $30,000 or $40,000 worth of income. $5,000 or $6,000 maybe. You with me? So now all of a sudden, you're writing off an arm and a leg, and it's increasing your odds of getting audited. How do they choose who gets audited? Well, we have auditors, if we can. I try to have an IRS auditor come in and speak with my entire team, just because not everyone in my office gets a chance to go out and speak with an audit, and I want them to hear the real scoop. And what the gentleman said is the computer spits out what the computer considers suspect returns. Yeah, 1.1, 1.2% for 2106, but these numbers are absurdly high, so we're going to spit this return out for somebody to look at. The IRS then goes out, and in the local area here in Southern California, Utah, Ogden, Utah, is the office that is the headquarters of the IRS for us. So they'll invite a bunch of auditors to come out and just look through returns. And because almost 80%, maybe a little bit more now, 80% of all tax returns are filed electronically, the IRS doesn't look at a finished tax form. Am I making sense here? Auditors really like to see that tax form to have a better understanding of how these numbers work. But all they're looking at is a bunch of spit out numbers on a sheet of paper. And they have as much difficulty as anybody else does understanding what these numbers are saying. All of a sudden, an auditor who doesn't understand how an actor could have $15,000 expenses on $35,000 worth of income says, oh no, this one's got to be, we got to look at this one. And if it passes through, you're going to get audited. Now, there are many kinds of audits. If you have not reported income, the scenario whereby you didn't get a W-2 from an employer, you didn't get a 1099, but the IRS got a copy of that information, the computer will usually generate almost within a year a letter called a CP-2000, where they send it out and say, you didn't report this income, or the income that was reported on your tax return is wrong for whatever reason, and therefore you owe this much money. Unless you explain to us why you don't owe this much money, pay it. And I'm willing to bet that easily more than 50% of the people who get these pay it. But don't. I urge you, don't. Last year, out of 8 of these letters that we heard from our clients coming in, 6 of them were wrong. Today, a gentleman came in. He faxed us his letter. It indicated that he owed $2,700. When I looked at the return, it said we had reported a 1099 for $915. His letter from the IRS said, no, that should have been $9,150. That's one of the 2 issues that caused this $2,700 tax increase. So he, of course, thought we had made a mistake. I asked the preparer about it. She was devastated. She had never made a mistake. Not to say it doesn't happen, but she had never done one yet. He came in, and his 1099 said $915. And the other form that was suspect was wrong. So all of a sudden, he doesn't owe a penny. But if he hadn't come in and checked with us, he'd have paid the money. So don't assume that just because you get one of these letters saying that you owe this money because you didn't report something is always right. It isn't always right. Everybody got that? If you can, sit down with your preparer and find out what happened, what went wrong. Now, unfortunately, all too many people are using home software. And they're not keeping a file, not keeping a copy. If you go online and you don't buy the software and you just do it online, you don't keep a copy of it anywhere. You may not even be able to print out a copy of your tax return. Had a gentleman who came in, and for the 2nd year in a row, he was being audited. I'll cover that much more later, but he couldn't get a copy of his return to be able to find out what he'd actually written off. So we had to contact the IRS, go through the process to get a copy of it, and as I said, they just distribute a bunch of numbers, so you have to kind of figure out what happened on the return, and he'd made significant mistakes. So be careful with home software, just in general. You may not be able to keep, you may not have then someone to go to for assistance to make sure that what was reported is accurate or not. A random audit. Chances are most of you will never have one of these. A random audit is what the IRS calls a situation where they suddenly decide we want to find out, I'm going to say it bluntly, how badly people are cheating. How, or arguably on the other side, how honest they're being. Are they reporting all of their income? Are they reporting all of their deductions properly? And so it's a random audit, and it's arguably the worst kind because they will sit down and they'll go through all of your checking accounts, all of your deposits. They look at everything, and it takes hours, sometimes weeks, to get through this process. And again, it doesn't necessarily mean that they're targeting you. They're just wanting to find out how the American people are reporting their tax returns. And as I said, it's performed to establish national percentages for use in the total audit process. When I said your return gets spit out by the computer has to have an idea who's right and who's wrong. Correspondence audits. More and more and more actors are going through these correspondence audits. What happens is you get a letter from some office, usually in one of the highlights of, if you will, of the entertainment community, Ogden, Utah, Long Island, New York, Philadelphia. Nashville arguably is a highlight of the music industry, but none of these people that are hired in these offices really have a handle on the entertainment community, and there's no one they can go talk to that has a handle on the performing, from an actor's point of view, community. And probably one of the most important things that they ask for in this letter is the demand you provide a letter from your employer outlining the reimbursement policy of that company. Now, the Screen Actors Guild has apparently gotten better in trying to help you with that. But quite honestly, there is no reimbursement policy when you work as an actor. There is one aspect of the contract, the theatrical and or commercial contract that's negotiated, where you are reimbursed mileage, but that's pretty much the only aspect. If you're working on a job, there is no reimbursement policy. Everybody understand that? But the reason for that, and if you want to take notes, this is something important, because all actor deductions are job search activities. Now, it may seem silly, but the truth is, if you're fighting with somebody during a correspondence audit that you didn't provide a letter, your answer back is, I don't need to provide a letter. Then why did you use a 2106, which is headlined, unreimbursed employee expenses? And that's because when you do a union job, you're working on a W-2, and therefore you're working as an employee. Well, why did you use this form if because the IRS says we're supposed to. So it's a catch-22. And unfortunately, these offices are full of people who aren't trained auditors or examiners. They are called tax technicians. They're really, I'm not going to use the word bureaucrats, they're just not very well trained to understand every element of the tax law. I've had discussions with the managers in these offices when I explain to them all of these expenses that you're declining because we don't have this letter. You can't because they're job search activities. They have to be allowed. What's a job search activity? This is a manager. I said, are you serious? You don't know? No. So I then had to fax them pages from their own manuals to define what job search activities can be, at which point they got them and they went, oh, I guess you're right. Well, we've already closed this case, so the only way that you can get it opened is if you appeal it, and, well, they're really backed up, so good luck. Well, we got the appeal, and the woman walked out scot-free. When I say we win an audit, usually in our office, our people don't have to pay a penny. All right? So she got out the door without having to pay a penny more. But it took her 9 months or more to get that whole process. And in the meantime, the state of California took the results of this so-called first audit, which declined all of her acting deductions, and now said, you owe money to California, so they started coming after her. And California moves very, very quickly, and they'll put a lien on your account and start taking money out. And all because a bad audit that she had to get clarified. So she got the letter from that auditor, the appeals officer, and sent it off to the state of California. And 6 months later, she was able to get the money back into her account on the lien. So I'm not happy with correspondence audits. When our people get a letter saying a correspondence audit, I simply say, call them, send them a letter, do both, and turn down the opportunity. Now, I want to be very clear everywhere, this is how I handle them. I know a couple of other preparers who will say, oh no, I have no problem with them. I love doing them because then you don't have to meet with them, blah, blah, blah. I don't know how it works, because if these people don't understand what actors are entitled to write off and they deny a receipt, how do you argue with them to say they're wrong? Now, actors out here, I think there's Samuel French's back in New York and elsewhere in the rest of the country. But Samuel French is a store out here where only scripts and only actor-related information is purchased. Well, you write a check out to Samuel French. And I've heard auditors on 2 occasions say, who's Sam French? Now, I don't blame them, because the next person coming in is going to be a carpenter, and tomorrow they're going to have a real estate person, and the next day they're going to have a teacher. They can't possibly know everything about this profession. But if someone's denied a receipt because they didn't understand it, you don't have an opportunity in a correspondence audit to address the issue. And most of the time, if you can't get that letter from an employer, which you can't get because it would be a violation of our contract for them to write a letter, because the contract negotiated between management and the unions is essentially the entire reimbursement policy. And when you explain this, they said, well, then send us a copy of the contract. Well, the contract in 1997 was about 500 pages long, and it's up to the management team to print the contract, and my understanding is they haven't printed it in years. So there's a digest, a Reader's Digest, if you will, a copy on the Screen Actors Guild website. Why don't you have it in your office? No, they don't care, they don't know. Anyhow, remember, your expenses are job search activities, but what I tell our people is, don't go. Beg to have a personal audit, which, if I'm correct, oh, well, I'm going to go here. Publication 1 of the IRS specifically states that we handle many examinations and inquiry by mail. We'll send you a letter with either a request for more information. It says specifically in Publication 1, you can respond by mail. In other words, send copies of your receipts back to the company wherever they are, or you can request a personal interview with an examiner. It says it right there. They'll turn you down all too often. Well, we don't do that in this office. I'm sorry, Publication 1 says you have to. No, we don't. So there you are. But it says it right there, so you have that behind you. Publication 556 specifically states you have the right to either represent yourself or have someone else represent you at an audit. How do you do that if the audit's taking place, forgot the name of the city, in Long Island, New York, or Nashville? You can't. And you can't even pick up the phone and call somebody about this. So, we suggest you go with an office or personal audit. And this is particularly important if you live in Los Angeles, New York, Chicago, where it's an entertainment show, we say Mecca, and there are more actors and therefore there are more experienced auditors with this industry. But unfortunately, I keep hearing about people getting audited in Denver and audited in Kansas City, and I don't mean unfortunately that you're living there and getting to work. The problem is their auditors there don't understand this process. We joke about it in our office, but somebody who apparently was on tour with cats was getting audited in Kentucky. And you cannot write off makeup. That's the basic rule. You need to explain why I have to have that professional makeup. Well, somebody who's on tour with cats has a need for professional makeup. And the auditor said, men don't wear makeup. No, sir. Have you seen cats? You know, we constantly put on a lot of makeup and we look like cats. He goes, men don't wear makeup. And no matter what he said, men don't wear makeup. Now, it's $300 or $400 worth of makeup, if you will, for the show. Is it that much money? I'll explain how it works later. Technically, the actor can ignore it, but if this is the mentality going on throughout the whole process, what's a costume? All right, what's driving to an audition? I've gone to audits where the audit was for a gentleman who was the assistant director. And we had, in the first question from the auditor, what's an assistant director do? And the wife who was there said, well, you know, it's kind of like a stage manager at a play. We understand. The auditor went, stage manager? Okay. And then she had to explain everything that the assistant director does, which when I learned a whole lot more about what assistant directors do, not the assistant to the assistant director who picks up your contract, if you will, and tells you to get over to the set. They spend a lot of time doing a lot of things. And when we explained it to him, he went, okay. But the auditor has to know what that job is to be able to properly decide what is and isn't deductible. You can't do that unless you're in an office or a personal audit. And again, this is what most people think of when you hear the term audit. They're usually held in IRS offices, but sometimes the IRS examiner will say, I'd like to meet at your office. I'd like to meet at your home. I think sometimes it's just because they're bored and they want to get out of the office. And serious. But they'll do that. So clean the house that day. How does an audit work? When you first get the letter, you're usually going to be told what it is they want to inspect. All too often they'll say your miscellaneous expenses. Well, for actors, that's pretty much everything you're writing off as an actor. Sometimes they'll say everything on your Schedule A, which is where somebody itemizes all of their taxes. And they could be talking about medical deductions, they could be talking about home mortgage interest, they could be talking about real estate taxes, and on and on and on, and charitable contributions as well. So know what it is that they want you to look at. I urge you to pick up the phone and call and say, I want to make sure that these are the areas you're concerned about, right? So I make sure these are the areas I'm going to cover. They're going to say, well, bring in all your receipts, but make sure you've got an idea of what you're supposed to cover. The audit, though, isn't limited to those areas if they think that there are significant other issues. If you've lied here, the chances are pretty good you've lied over here. So they have the right to look into that. And if at the end of your audit, for example, let's take that guy or that woman who made $30,000 and had $15,000 of miscellaneous deductions, if you will. If they live in Los Angeles or New York, we now have a personal exemption of $3,900, if you will. Now, supposedly, you're living on $10,000 of taxable income. How did you do that? And the IRS has the right to find that out. And they may ask, show us your deposits. So I'm going to give you an instance where a gentleman walked into my office. He said, here's my paperwork, here's my bank records. I want all my money back, all the money I paid in. I went, okay. And I just glanced at his income, which was supposedly like $18,000. And I glanced at his deductions, which were like $25,000. I went, well, you understand the IRS may wonder how you have $7,000, you spent $7,000 more than you made. Gifts from family, or my credit card. Okay, fine. Obviously, it looked a little shady, if you will. So he left his bank records there. And the IRS specifically says, if there's something that I think is suspect and I have the documentation in front of me, I am required to investigate. So I added up all of his deposits. He deposited $56,000. And as I love to say, you can write off whatever you want. If you get audited and the IRS says this isn't legal or you can't prove it, you have to pay the tax on that. If you're overly abusive, if you will, they may penalize you. That's pretty much all they can do. If you don't report your income, that's a very serious offense. We've all heard the story of Al Capone. What's his name? Elliot Ness gets all the credit for having put Al Capone in jail. When the time came to decide how they're going to go after Al Capone in court, Elliot Ness supposedly came up with 3,000 criminal charges against Al Capone. The IRS came up with 6 charges of tax evasion. And the judge said, we're going to go with the 6 charges of tax evasion. And won. So again, not reporting income is something you better keep an eye on. When you're at an audit, the first thing the auditor will do is greet you. They're going to ask you a series of questions that seem really like an interrogation. So, is this all the money you made? Did you report everything you made? Do you have any other interest? Did you win any lotteries? Did your parents give you money? And on and on and on. And it really sounds, in many instances, depending upon who the examiner is, very aggressive. Like, yeah. Relax, though. It's normal. What they're trying to do is set a bar. For example, on that gentleman that I just told you about. Did you get any gifts from your family? Yeah, some. How much? Do you have a lot of credit card use? Yeah, how much? And they want to have that established at the beginning. They ask you to bring a copy of your return. You think they don't have a copy. They don't. In today's world, when you e-file, they really don't have a copy of your return. So it's normal to ask for it. But again, if the situation is that you filed online, you may not have a copy. But if you do that, keep a copy. That make sense? Always keep a copy. They'll also ask you to bring in prior years as well. Now, most of the time, they just ask them to be handy. They're not really going to go after them. They just want to sometimes compare the numbers. How come you spent $15,000 this year, but last year you said you only spent $4,000? What happened? I got an agent, I started auditioning, I started being told I had to go take these classes. My agents and my manager said I had to go over here and get my pictures taken and blah, 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 blah. Another young lady who came from New York, who'd done a lot of stage work in Broadway in New York, didn't have any film. Had nothing to put on a demo tape. So she came out here and she created a film starring her, and she paid for it. That's a good reason for why these deductions are so much higher. After they've done that, they'll go to write-offs. Yes, sir. Question? No. Oh, for him. I'm sorry. Yeah, you can go to the restroom. Beep. Now, should a taxpayer attend an audit? There are a lot of preparers and representatives out there who will say no. I don't want you talking. I don't want you participating. I say yes. I urge you to follow your own lead, follow the advice of the person you're going in with, make sure that you trust their advice, obviously, but follow your logic, not your ego. Too many people think, well, I'll go in and I can bamboozle anybody. And a lot of actors think they're the world's best liars. They're not. You ought to see them crumble in my office when I ask them a question. They're not the best liars. And you're up against expert lie detectors. These people see people all day long, sometimes 4 at a time, 4 in a day. They know when you're lying and when you're not. So, again, follow your logic, not your ego. I say, though, you should be there. Now, I'll sit down and I'll go through with you if you come into my office. I'll explain what the process is. I'll explain where you're at with your deductions. I'll tell you here's where you got a problem and here's where you don't have a problem. But my belief is, if somebody's going to deny something, you're the one that's going to have to pay for it. There was a CPA who I met years ago, right here at the Guild, and his attitude was, I love going to audits for other people because I love giving away their money. Now, he didn't really mean it that way. What he meant, though, was sometimes CPAs and people who specialize in audits have come to the belief that if you've got a $4,000 bill and I can get you out of there for $500, that's a win. In my world, having been an actor, having been around actors who know how important $500 is to their career, I've seen too many actors put their career off for 2, 3, 4 months while they save their money to get their next headshot. And to say, yeah, I'll pay $500 because that's better than $4,000, I disagree. So you're going to defend your position correctly. Now, I better have trained you to say, don't go there. This deduction is invalid. And in my case, I'll simply not bring it in if I can get away with it. I'll say, you made a mistake on your return here. Don't claim it. How to prepare for an audit. Hopefully you kept your receipts, your records, and you maintain them safely. And after you've taken advertising, classes, cell phone usage, and you've got these bills lined up, you've put them into envelopes or plastic bags of some kind, and you've totaled them all up, and you put the slip in there that says how much are in this bag, you've zipped it up, you put it away, and that's what you've done. Hopefully you've done that. I know better. Most of the time, you just put them back in the box. Oh, this was office. This was photography. Oh, this was, yeah, this is I bought a cell phone, okay. And you put it back in the box. So now all of a sudden you're being audited, and somebody's saying add them all up, put them into categories, and you essentially have to start all over again, which is what I urge people to do if they haven't done the right thing. And that is take the tax packet, sit down, total everything up, put it in an envelope, and as I said, sure you did, yeah, right. Tax is done for the first time. For whatever reason, even if you put everything in the box and you're sure you had everything in the box, when you come 2 years later and you're having to be audited, the receipts that you thought were there are not going to be there. I'm not saying you lied on your original return. You may have included numbers that you were going to get a receipt from, a receipt for. You took a couple of acting classes that the woman or the man said pay in cash, and you did, and you said, okay, I got to go over there and get a receipt from them, and then you forget to do so. Place the receipts and records in categories in plastic bags or envelopes and write down the category. And I urge you to total those expenses, and I suggest you use Excel if you know what I'm talking about, or a spreadsheet. You can use an adding machine with a tape, but if you add another receipt to it, now you have to re-add up all those receipts. Bottom line is, it says photography or advertising, whatever you may use. They're in the envelope. If I pull out that piece of paper and it's got a total amount, I don't care, you don't have to specify more, just add up the value of the receipts. And it says $347. And I can pick up that bag and I empty it and I add up and I get $347, the IRS auditor will love you. You may have 20 bags like this for all the different categories that you've got. Inevitably, if you've done your job properly, you're going to get mad at me at the end of the audit because the auditor will look at 3 of them, 2 of them, 4 of them, just to make sure they're all there and they all add up, because then all the auditor has to do is go through and say, yep, we got them, they match up. Are you with me? It'll speed you through the audit. And I'll bring this up later in this presentation. And appearing to be prepared for the audit astounds them. In their mind, you're treating them with respect. You with me? Do it right. Moving on. Again, well, look, be prepared. The more together you appear to be, the more impressed the IRS auditor will be. All right? I want to look at the clock to make sure I'm staying on time. Well, I know I'm within. Okay, all right. The more impressed the auditor will be. You'll still have to prove your expenses, which, as I said, you're going to have to prove that the receipts are in the. We'll get it later. Don't jump for it. It's just an audit. Okay. It's just $1, I think. All right, stop there. You're going to have to prove you have the receipts, and you're going to have to prove that the receipts are for valid expenses. And I don't want to let the secret get out there, but if you do this properly, the IRS believes you a little bit more than when you don't. All right? I know a person who had put all his receipts into a program. All right? But the IRS doesn't trust that printout that says you spent money. Anybody can fill that out. They need to see the actual receipts. So he had literally a big box of receipts. But here was the printout. And he knew that every receipt on that printout was in the box. So he just brought the 2 of them into the auditor and said, here you go. And the auditor said, what? This won't do. Asked me to find a receipt. ask me to find a receipt. And I would spend 5 minutes going through the box looking for a receipt. This was my audit. Now, I knew how to do it, but this was years ago, and I wanted to see just how far I could go to bend the rules, if you will. I knew I couldn't lose. I actually had more deductions than I had reported, but I wanted to see just how far I could push this before I got in trouble. She finally gave up after about the 12th one, and then I got a lecture on how to do taxes and how my responsibility is to have everything put together. I said, I have all the receipts. I did do the booking. Never mind. And I got out. So I'm showing you, but I was, the bad side, but I was there for 3.5 hours. Most of the time I can get out of an audit in an hour and a half. That's, I say it's always that way. I've had auditors look at virtually every single receipt you bring in. You almost think they're on commission. They're not, but this one woman loves looking at every receipt. I won't tell you what office she's in, but you go, my God. And quite honestly, she's outstanding. I went in with one gentleman, and the first thing I said was, why are we here? Because the guy had what's called alternative minimum tax. Get into it. But it's an additional tax that he had to pay because he had more deductions than he was allowed to write off. If you've been hit with AMT, you know what I'm talking about. If you haven't been hit, it's not worth the discussion now. But essentially, the IRS places a limitation on how much you can write off, particularly for miscellaneous deductions. And in this situation, she would have to find $5,000 worth of receipts and disallow them before she could start making some money. So my question really was, why am I here? Why are we here? She said, well, that's what we're going to find out, isn't it? And as she went through all the receipts, she found the original receipt for a fax machine, the credit card statement that he'd paid for the fax machine, the check, the invoice from the credit card company for the fax machine, and the check he wrote to pay the credit card company for the fax machine. And she just beamed because it meant he'd written off $230 4 times instead of just once. And she thought, well, I got you there. And she started deciding, you can't have this, you can't have that. And he was starting to kick me. Why aren't you fighting? Why aren't you fighting? She got up to about $1,200, $1,300, and I said, no, we're not through fighting, but you can go ahead and add them up now. She started adding it up. Okay. And after about 5 minutes, the IRS program is really intricate and it works bass-backward. But by the time you can see her go, I said, oh, you got to the AMT. Yeah. Why are you here? I said, do you remember my question when I first walked in the door? She went, oh, that's what you meant. Now, we'd spent 4 hours together going through every single receipt. She ended up saying, all right, guys, get out of here. Leave. That's how sometimes the audits work. Would we rather spend 4 hours having to be nice and not get her mad at us? Sure. But don't be afraid to stand up for your rights. What's deductible? There is no set list of active deductions. Period. Essentially, I was told by a very high-up guy at the IRS that what is deductible is left to the discretion of the auditor. You may not like it, but that's what the rule is. Now, that doesn't mean that they can decide whatever they want. If you know the rules, you have the right to fight for what you know is proper. I've been in situations with a young lady where she wrote down $500 for a headshot. So what? We say, $500, that's fairly normal. He goes, that's ridiculous. You don't need to spend $500 for a picture for the internet. You just need, that's all you need. He literally did that at the audit. In addition to paying $500, she was a photographer. And I have been a working photographer. He didn't realize he had just insulted both of us, in addition to this baloney. He then went on to say, Agent commissions? Why are you paying an agent commission? I've got a friend of mine who's been in the business for years. He's never had an agent, so you don't need to have an agent commissions. What do you need a website for? In today's world, you can get a website for free, meaning Facebook or something like that. No, you don't need that. And he then sat back and he typed in, apparently, his friend's name, and up pops a very professional website with a very professional picture listing both of his agents. I said, oh, well, thanks. You just proved what I was saying. You're wrong. And he hits a button and goes, what are you talking about? The guy was absolutely wrong, to the point of it being so ridiculous, it was a Saturday Night Live skit. It was ridiculous. The young lady who was being audited told me that she had looked him up on Facebook to find out who this guy was, and by chance he had a Facebook page that stated he was doing a rock concert in New York. Well, he had called her and said, you know that appointment we have for Friday? I have to cancel it. I'm going to be out of town. So let's reschedule for 2 weeks later. Well, the reason he was out of town is because he was doing a rock concert. So she had told me this before. We're now in at the audit, and he says, well, do you have your agent's commission? She said, no, I brought it in the first time you looked at it, but I didn't bring it back. He goes, well, then I can't allow it. I said, well, then she can go home and pick it up and bring it back tomorrow. No, my manager says this case has to be closed today. I've had too many cases here, and we've got to wrap this all up. I said, your manager's telling you that this case has to be ended today. Is that correct? Yes. Why don't you go explain to your manager that the reason we weren't here 2 weeks ago is because you were doing a rock concert in New York, and we'd like to have 2 more days to be able to get all this stuff in. Some of us have a life. Fine. And he walks out. I don't think he ever made it to the manager. And came back and said, fine. He said, you could have another week. Okay, good. This was a situation where I was literally reading out of the manual as the audit went along. He would say, actors can't write off movies. Cable. Actors can't write off movies and cable. I want to be clear on that. Unless you can prove the educational value of those movies. And that's essentially what I read in the book. After he'd said, you can't have these, I said, actually, no, the book says if he can prove the educational value. So which point he goes, and how are you going to prove the educational value? And I said, well, it's about this time that most auditors say, would you show me your viewing log? He says, a what? A viewing log. Fine. Looking at the young lady, he goes, fine, show me your viewing log. She hands it to him, and she had an extensive viewing log, and he went, what are you, anal retentive? Saturday Night Live skit. So know what's right, know what's wrong. At the end of it, he said, so is this how you win your audits all the time? You just browbeat the auditor? I said, if you mean making sure that what they're saying is correct, yes. I do make a point of making sure that you're on the same page with the rules. Going on. But that's your job to know. This is really important. Don't lie. If you've put something on your return that isn't provable, don't try to lie your way out of it. Just simply say, I lost the deductions. I don't have them. All right? It's like your mom. When she knows you stole the cookie, she now has a reason to mistrust you in the future. Young lady used to come into my office with 4 books that thick, every receipt in the world, all carefully taped, glued up. What section? Do you have your office expenses? Yes, just a moment. She'd pick up the 3rd book and open it up and go to right. She goes, here you are, and there's the total. She gets audited. I'm actually going, wow, I dare the IRS on this one, because I knew she was prepared. In those days, we're talking about 12, 15 years ago. Boy, I'm aging myself there, aren't I? 12, 15 years ago, you weren't allowed to write off your home phone, but you could write off the business toll calls on your home phone. And she had very carefully lined all the toll calls that she could prove were business oriented. And the auditor's looking through them and went, okay, and she was about to wrap it up. She goes, I see this number to New York an awful lot. Who is this? My mother. The woman had written her mother's name as a toll call. And as a result, you could almost see a transformation take off over this auditor who went, okay. And she then started to look at every single receipt to prove that it was in fact valid, because the woman had said, I lie. We're talking maybe $100 worth of phone calls, which in the 15% tax bracket is worth $15. Who cares? But now you're a liar. Okay? Don't lie. Don't ever give them a reason to think for a moment that they should be suspicious of what you're saying. What if you're missing receipts and records? And this is a common problem. You don't think you're going to get audited, and unfortunately all too many people make up the numbers that they put on their tax returns. They think they have an idea of what they spent, and they just write the numbers out. First of all, don't do that. Spend the 4, 6, or 8 hours. I'll tell people when they come into my office, I'll say, you, sir, if I wanted you to work for me, how much would you charge for a day's work? $200. $200, about normal for everybody? I'll bet I could probably get you for less, but let's just say $200. If you're in the 15% tax bracket, $1,000 worth of deductions is worth $150 to you. $2,000 is now $300. You'll work for me for one day for $200, but you won't work for yourself for $300. You got it? All too often, the time that you spend adding up your receipts and actual records, I love saying this, is the best paying day you had last year. Well, no, I shot a commercial. I was on the set for 2 hours and I made, $27,000. You lucked out, okay? But for the most part, that'll be the best paying day you have. Sit down and do the work. Do it the way I'm telling you to do it. Put them in the envelopes, add them up, put them away. Make sure you keep all your paperwork there. Stick them away, and you never have to think of it again. But what if you don't have your receipts? What if you have moved and you've lost them or whatever? Go to your bank statements. Obviously the checks, but I can call up my debit card transactions that specify who I paid. And if it says Samuel French, I've got a winner. If it says Office Depot, I've probably got a winner. If it says Target, not so much a winner. There are too many things I can buy at Target that are not deductible. So even though I may know that I bought a file cabinet at Target and therefore it should be deductible, if I don't have the original receipt for it, you've lost it. Sorry, guys. You with me on that one? All right. But your checks and your debit card transactions are great. Of course, your credit card transactions. Nowadays, you get reports from any number of companies that say, here's what we think are deductible expenses. Well, you can't write off all your restaurants, all right? You can't write off all of whatever it is you may have traveled, etc., but it gives you a pretty good idea. But more importantly, it lists what those things are. Can you get copies of those receipts? You may not be able to go to Target to get a copy of an $80 receipt for a file cabinet, but you might be able to go to an acting class and get a copy, and get a copy of the. Oops, sorry guys. There we go. Of how much you spent with them. All right. If you have a photographer that you spent money with, you gave her cash or gave him cash, don't do that. But they might provide a receipt. Really important. If someone you're working with doesn't want to give you a receipt and they want you to pay in cash, it's because they want to cheat the IRS. They can do whatever they want. But if you're supposed to be working with someone because they're a professional acting teacher, professional photographer, professional whatever, then you should be treated like a professional as well. And that means get a receipt. All right? You should be able to go to somebody to get another copy of that receipt. Mileage issues. There are two things that you need to report for mileage. One, your total miles that you drove all last year. People will come in all the time and go, how do I prove my total miles? Did you get oil changes? Did you get any repairs at all? In California, when that happens, they have to write down your odometer reading. If you take an odometer reading from February and an odometer reading from November, divide it by the number of months, multiply it by 12, you've got your total miles, and that's acceptable to the IRS. But that's not your business mileage. How do most of you get your commercial auditions nowadays? Email. Keep a copy of the email. Don't discard it. Keep a copy of it. If your agent is sending you emails for your theatrical and or commercial auditions, keep a copy of it. Put a folder in that in your email situation. If possible, print it out on what's called a PDF file and store that in a separate folder on your computer. And then periodically take a flash card, a flash drive, stick it in there and move the folder over to the flash card so you've got it backed up. Arguably, if you wanted to scan all your receipts, you're on what is now a $5 flash card. That's what you need for the future. You don't need a box of receipts, arguably. You're going to get your credit card transactions by PDF. You're going to get your bank statements by PDF. All too often, everything's coming out through the emails nowadays, and you just have to make sure you keep your records that way. You don't even need the box anymore unless you go to Target. If you go out and you have a meal with somebody and you want to write that off because it was a business reason, you're still going to need to have a little receipt of some kind. If you put it in your book, write it out. Had dinner with Chuck Sloan to talk about taxes. I spent $56 to buy the schlug of dinner. Okay? That's a valid receipt. All right? If you handwrite a receipt for less than $75, it's a valid receipt. I thought you'd start writing that one down. But whatever you do, don't think you can walk into an audit with $275 receipts. Okay? Don't try it. Audit appeal steps. We're going to hold here for a moment. I'm going to discuss one audit. A gentleman came to me. He was being audited, and he lost all of his records. And he was being told that it was going to cost him $5,500, whatever the amount was, but it was frightening him. And I said, let's see how far we can go. Go to your bank, go get your statements, let's see what we can come up with. But I don't have my auditions. Just go to get all the proof you can. He did. It was a lot of work. But for $5,500, even I'll get out of this chair. All right? So he comes up with most of it. He doesn't have any of his mileage because he doesn't have his auditions. He doesn't have this. But he had a payment to his acting coach, which meant that he had to have gone to the acting coach. He had a trip to Office Depot because he had a receipt from Office Depot. So we started adding up with that kind of mileage. We couldn't come up with auditions without making them up, but he'd worked 8 jobs. He had 8 W-2s that said, here are the places I've worked. Well, we'll stop for a moment. So the auditor, the first thing she wants to see is the mileage log. I said, would you mind if we waited until the end of the audit, and then we'll show you the mileage log? And she went, fine, we'll do it your way. Sometimes they don't like me at the beginning. We went through all of his receipts, and all of his receipts passed muster, were acceptable. She then said, okay, now can I see the mileage log? I said, you've already approved it. What? We're only claiming the trips to all of these places, the Office Depots, the acting classes, the this. That's what we've written off here. We're taking 8 auditions because he had 8 jobs and he had to have had the audition to get the job, right? Yeah. And we're taking 8 callbacks for those jobs, yes. And the only thing a little strange was he met with his scene partner every week before acting class, so he would drive over to that person's house, and so we took that mileage as well. She looked at it and went, pretty smart. We're talking, you can prove your mileage, all right? So don't give up. There are ways of proving everything you need to prove. Let's suppose for a moment that you go into an audit and they decide that you get an auditor who says that's what you need for a headshot. All right? What do? They have thrown out $3,000 of your receipts. It's going to cost you $450 plus interest. Let's just say $500. Who do you appeal? Well, after your initial meeting with the examiner, you can appeal the decision with that person's manager. Sometimes, however, that person is following the direction of their manager. So you can't write off certain things because the manager has said, no, we're not allowing that this time. All right? So be careful. So the manager agrees. What do? You can file your first appeal. When you file an appeal with the appeals office, you get a chance to meet with an appeals officer. Keep this in your mind. The appeals office is really mediation. Their job is to get the case closed, get money out of you if they think you owe, but they're also there to follow the rules. You may have had a horrible auditor the first time, but the appeals officer is usually somebody that knows what they're doing. All right? Again, most of the time our people leave the appeals office not owing a penny, even if they've been played around with at the first appeal. So let's suppose you still owe the money, and you haven't appealed it, you haven't taken all the steps that you're supposed to take. You'll receive what's called a notice of deficiency. Usually these are sent out certified mail. They used to always have to be sent out certified. I'm going to tell you another rule. Don't ever be afraid to open an envelope from the IRS. You may not like it, and it's very rarely good news. It sometimes has been, but at least read it to find out what they're talking about and deal with it if you can. All too often it's this situation of the gentleman today where all he has to do is fax the copies of the actual 1099s to the IRS, and that'll probably close this $2,700 issue. But if you ignore it, they'll eventually send out a notice of deficiency. Now you've got a problem because your appeals chances are, to a degree, almost completely limited, because your only option then is to take it to tax court. Now, tax court doesn't mean that you get to play law. You have to spend $60 to set up a case with the tax court, and the first thing the tax court will do is send it to an appeals officer. So going back to that correspondence audit, if they decide that they're not going to let you have a personal audit, they're going to demand that you deal with them, or they're simply going to send you a notice of deficiency, don't be frightened. It's a normal step, but appeal it with the tax court, and you will then get your personal audit. Now, I have to tell you, as a result of correspondence offices, and I'm happy to say this to anybody at the IRS that's listening, the appeals offices are getting all backed up. In the words of 3 auditors I've now heard in the LA area, quote, correspondence offices shouldn't be doing actors' taxes. They don't know what they're doing. And so they're going to tax court, they're ending up in appeals offices, and eventually the appeals officer makes the deal. Again, it's not necessarily what it sounds like. It's not your chance to play lawyer. It goes to mediation. $100 rule. If an auditor or the appeals officer cannot come up with enough denials, if you will, to equal $100 worth of taxes and or interest, your case is over. You can walk out the door. I've had a case with a young lady who was audited. The auditor went through and said, you can't write off this pair of shoes. $107. I didn't see it originally, but she'd also tried to write off a parking ticket for, remember that woman that was the Broadway person that came out and did her own film? she paid a crew member to pay for the parking ticket the crew member got. And I said, I'm sorry, you can't write. And just about the time the auditor's about to say, I'll let you, I said, you can't write off, that's illegal. And he went, well, I was going to let you have it, but your preparer is correct, you can't write that off. Out of the two, though, that's $230. That's what was totally denied. If you're in the 15% tax bracket, $37? Less than $37 worth of taxes? We got out because they owed nothing. It was less than the $100. If they find something that they deny and that you are wrong, it becomes what's called a change, no change. Who cares? You got out the door without owing anything. Ideally, you can walk in there with a no change, where they don't find anything. And in a couple of scenarios, you walk in and you may not have written off everything you could write off. You've saved $1,000 or so in reserve just in case, and now you push it forward. Now the IRS owes you money. Don't fight for it. Sometimes you can say, I'll take a no change. And if you get a no change, they can't audit you, or generally will not audit you, on the same areas for the next 2 years. So if you're an actor and you've gotten away with miscellaneous deductions that have had no change, they can't come after you for 2 more years. Now that's not a license to cheat. And I've actually had to tell somebody who was a client, I'm not going to do your taxes because now you want to cheat. All right? But at least you're off the hook for a couple of years. What happens if you still owe? Or you still feel that you got, shall we say, shafted by the IRS? The young lady who was a participant in that audit with the camera, the guy did not send her a letter explaining what he was denying. Somehow she just didn't get any of the correspondence from the local office, and she suddenly got a bill. You owe this much money. She said, I want to appeal it. And they said, you can't appeal it. The month's up. She then called the tax advocate office. The tax advocate office got on the phone, called the office, and said, you didn't do your job. She never got a copy of the letter. Well, the letter says we sent it to her. She never got a copy of the letter. She wants an appeals off. She wants an appeals case. I get a phone call from the manager. The manager is asking me, what's all this about? This audit was so ridiculous, I had her giggling on the phone. Seriously. To the point of where she said, Chuck, you know, when you come in for this audit, you can't make me giggle. I said, all right, I'll be good. I won't make you giggle. And we got in there, and it was done. We took care of it. It was all done. But the tax advocate office can help you if you fulfill certain responsibilities. Again, if it said, and this is directly from their website, if you can't resolve your problem with the IRS, and your problem is causing financial difficulties for you, etc., you face an immediate threat of some kind of adverse action, they want to put a lien on your accountants or whatever, call the tax advocate office. If you've tried repeatedly to contact the IRS and no one's responded to you, and that happens all the time, particularly with correspondence cases, sometimes they can step up. You'll often, if you're dealing with the correspondence audit, they'll say, thank you for your letter, we'll get back to you in another 90 days. And suddenly at the end of 60 days, they're sending you another letter saying, would you extend the time period for us to have this audit take place because we haven't responded to any of your papers. All right, call the tax advocate office. You have to qualify for their help, though. They don't offer it to everybody. It's part of the IRS, but they're really working on your behalf. And I can't speak highly enough for them if you get someone really good working on your case. And if you're in serious trouble, call the tax advocate office. If you owe, payment plan. First, you'll have to file all your required tax returns. They're going to consider all the sources that you could use to have you pay your tax debt. They'd rather see you put it on a credit card at 20% interest than carry it with them for 3% interest. What? Carry it with them for the 3% interest. You're going to come out ahead. They'll determine the largest monthly payment you can make with a $25 minimum. You have to know that your future refunds, if you have any, will be applied to your tax debt. If you get on a payment plan, and we're not through here, make sure that whatever you ask for as far as your payment is low enough that you can make it consistently. Because the moment you don't make a payment, they can throw the whole plan out and start all over again. You might have made a payment plan when you were primarily getting unemployment. Now all of a sudden you've got 3 commercials running that are bringing you in several $1,000s a month. They know you can pay more. But you don't want to change this low base, okay? Here are the fees for setting up an installment agreement. If it's direct debit, they're only going to charge you $152. Excuse me. Direct debit means they're going to go into your account and take it out every month. Well, what if you don't know if you're going to have enough money in there? Well, then you can do a standard agreement and send in the money once a month. You can discern or decide what date you want to make the payment. That's your call, but that'll cost you $105. And they'll play easy for you. If your income is below a certain level, they're only going to charge you $43. I'm going to go back to this other one, though. If you're on a payment plan, remember, in general, they want that payment paid in 1 year. Okay? In general. After all, you created it in 1 year. That debt was created in 1 year. They want to see if they can take care of it in 1 year. They'll go 2 years fairly easily. The most they'll go is 5 years or 60 months. All right? Be careful with that one, because you don't know when you may end up owing some more money and need to add it to it, and now you've got this long-term debt that's going to drive you crazy. And obviously, the sooner you can, pay it off. If you live in the state of California, and I don't know how aggressive the rest of the states are, but in California, we urge you to take care of the state of California as quickly as you can, just because they go after the liens on your accounts and on your employers in a heartbeat. All right? It's easier to work with the IRS than it is to work with the state of California. I think I just finished. I think I've covered everything I wanted to cover, but we obviously have some questions. Number 1. Please mention the PowerPoint is linked to this video stream page. Please mention the PowerPoint. The PowerPoint is linked to the video stream page. Whatever the heck that means. Do you want to explain it?
It's on the SAG Foundation website.
Oh, it's on the SAG Foundation website. I wasn't all that in detail with this. It was really there to give me some cue cards, if you will. But I think I filled it out pretty well. If you need more information, some of the information that you need to work from, to go to the IRS website or wherever it is there. If you have questions as to what's a valid deduction or not, I'm going to say this, and I don't think you brought it up. The Screen Actors Guild doesn't endorse me individually. I'm here as an expert, so I want to make that very clear. The foundation's not saying, oh, go to Chuck. But I brought up the fact that sometimes people need to find out what is a valid deduction, what isn't. On the chucksloan.com website, we're very specific on what is and isn't deductible. We've gone out of our way to have the IRS representation, their words, if you will, written down, and then we try to explain it on the other side. So if something's on my website, it's valid. I have to take the conservative approach. Are you with me? I can't say, oh, ladies, you can write off some of your hair, some of your makeup. There are ways that you can write off hair, makeup, and such, but you have to be very specific in its application to an actual job or hiring situation. So I take the conservative side on there. There are other preparers who will argue with me, for example, about home office. Oh, go ahead and take a home office. There was one situation I remember of a lady coming in who had been audited. She had a studio apartment, 350 square feet, and whoever prepared her taxes said she can have a third of that for her office. A third of a studio? Realistically, most actors work in a corner of the room, which is about 6 by 6. 6 by 6 is 36 square feet. It's not a bedroom. It's not their living room. So if you take 36 square feet out of a 1,000 square foot apartment, it's not much of a write-off. But in her case, it was a third of her rent, a third of her expenses, a third of her everything. She was getting perhaps a $6,000, $7,000 deduction by the time it was all through. I may be really high there. And the IRS said no. And she ended up having to pay a lot of money back because there was no way she could validate a third of that space. So chucksloan.com if you want to know what's going on. Are you more likely to be audited as an individual or a corporation? Probably more as an individual. As far as what we're talking about here is as an individual. If you're a mega million corporation, chances are pretty good there. If you're using an S-Corp, which I think is what this is probably referring to, and an S-Corp is basically a loan-out corporation where you're making so much money on W-2 income that you are hitting this alternative minimum tax. And I'm not going to get too in it because that could take 10 minutes for me to explain that mess. But essentially, you're limited in what you're allowed to write off. And with an S-Corp, you're allowed to write off all your deductions and then carry over the profit to your personal return. It's not quite as easy as that sounds because the S-Corp is supposed to pay you a salary, so now you have additional costs of bookkeeping and payroll, et cetera, et cetera. You're having to pay both the self-employment for the employer, the self-employment that you normally have taken out, your Social Security tax is what I'm saying, for you, so be careful. The next question here, though, is when should one incorporate? In general, we're going to tell you within probably $150,000 to $200,000 of W-2 income on a regular basis. And you can almost tell exactly where that statement is by the AMT. When the amount of your alternative minimum tax equals the costs of paying for the corporation, that's the time to incorporate. But you want to do that when it happens all the time. I don't want to get into that discussion. I can later if you want. If you're here in LA, we can talk about it after the fact, but let's move on. The problem here is that a lot of people don't understand that the cost of being incorporated, if you include what you're losing by not getting W-2s, there's an extra $7,000 to $8,000 that you lose because you're not getting paid as a W-2 employee. So if you don't understand what I just said, sorry. We're going to get into that later. We're not here to talk about corporations. We're here to talk about audits. Do you have to accept cash gifts? Do you have to report, thank you, cash gifts on birthday and Christmas? No. I can give you, I won't, but I could give you $13,000 in cash, any of you, as a gift. You don't have to report it. It's a problem for me if I give you more than $13,000. So if my parents were around, they could each give me $13,000, and I'd have $26,000. If I were married, I haven't met her either, so you'll figure out why soon, we could both get $26,000 or $52,000, and that's tax-free. Does that answer the question? If my employer gives me the money, it's not a gift. All right? If I give a gift of $2,000 to a young lady, just because I'm a nice guy, I don't mean to go where that could go, all right, for the first time, that's a gift. But if she mows my lawn with the intent of earning that $2,000, it's not a gift. Got it? So who's going to report her mowing the lawn? Nobody. From Sloan, I'm not going to give names if that's okay. Would you please speak, are filing in multiple states? If I work in a different state from where I live, I know I have to file in the states, but do I have to pay taxes to both states? Yes. If you owe, you have to file the tax return. If you're going to get $2 or $3, $5, $10 back, depending upon what your preparer may charge you to create that tax return, that would be kind of silly. In our office, we have a statement that we charge $40 for all extra states. If you are going to get $12 back from New York, are we going to file a charge of $40? Not in my office, but in some other Harry and Roberts tax, they may. If you owe the state, you have to file the tax return. All right? So be careful. Now, why is that important? Athletes are really having problems with this because athletes get these mega salaries, and every state they play a game in is charging them the percentage of their salary for the time that they're in that particular state. Which is why it really is important if you're the Lakers competing with Florida. California is now the highest tax state. Florida does not have state taxes. So if I'm representing a team in Florida, that's a huge benefit. Half the games are played in Florida, and there's no state tax. All right? What deductions expenses should we know about that actors often do? Go to my website. That's how I took care of that. Tonight's lecture is not about that. I have to talk about audits. What are the most common worst mistakes that actors take? Believing they can write off hair, makeup, and nails if you're a woman. Believing that they're entitled to write off the gym. Unfortunately, all too many times, actors think they can write off their clothing. You can't. If I can wear it on the street, that's a big problem. If I can wear it on the street and be, as one of my people says, if I can go into Safeway or Ralph's and not have people stare at me, the chances are pretty good that's street clothing. And you can't write that off. But the only time I wear my suit is for an audition. Doesn't matter. I love this line, it is as much a costume to the businessman as it is to you. The only difference is you consider it a costume, they don't know that it is. All right? They're wearing a costume to fit into their environment. Sorry, but you can't write it off. So that's the worst. But there are always, can I, whatever. If I receive $100 from my dad for my birthday, I get 50% of it. Cool? All right, so much for humor. What if it's 500? When is it necessary to report? If you get a gift, you don't have to worry about it. All right, but make sure it's a gift. When the letters come in, at what point do you need a tax lawyer? You need someone who you can go to explain what's going on. You don't need an attorney for that. There are attorneys who specialize in taxes, but they generally specialize in these cases. Are you with me? And they don't want to deal with you on this case because I'm going to charge you $350 an hour to explain that all you have to do is send your faxes in to take care of this. They'll do it, but be careful. All right? Find a good preparer that you trust that provides legitimate information, and we'll let it go at that. Okay? When do you need a tax lawyer? When you find out you owe a whole lot of money, and or you think the IRS is really playing around with you, when you have gone and done the research to know that what you're writing off is a valid expense and they're still disallowing it, maybe it's time for an attorney. Now, there are all too many ads you see on TV. If you owe $10,000 or more, you should call us. You should have called somebody before you owe the $10,000. Be careful with them. I can't say they're all, and I don't want to give the impression they're all not honest, but I do know that there are a couple out there who really take your money and do that much work for you. In many instances, you can do what they do if you're not afraid to pick up the phone and call the IRS. The most important thing that most of these people can do is create what's called a letter of compromise. And unfortunately, you have to be in, I don't want to say dire straits, but at least whoever's representing the news to them has to represent that you are having severe financial issues, and therefore paying the $15,000 you owe is going to be a problem. Does baking cookies help? Don't take them into the audit. Okay? Obviously cookies help me, but baking cookies at the audit, they'll just simply push them aside. They cannot accept gratuities. All right? If I want somebody from the IRS to come out and speak to my group, we've got 12 people who do taxes, I can't even pay for their gasoline. All right? If I have a meal set out for everybody, they can't have any of it. That's how stringent the rules are to make sure that there's no abuse. And as much as we talk about audits, IRS employees are audited every year. All right? So much for the cookies. Do we need to keep a mileage log? I would urge you to keep a record of where you drove. All right? You don't have to write down the odometer reading each time you get in the car. If I'm going to drive to 200 South La Brea in Los Angeles, which is where commercial auditions take place, all I need to do is put 200 South La Brea from my home. What's the mileage? Unless you move, the mileage is, just for the sake of talking, is 8 miles there, 8 miles back, 16 miles. Now all I have to do is add up how many times I took a trip there in the year. You with me? But you need to keep a record of where you went. All right? If you don't do that, you've lost it. Try to remember 2 years from now where you were 2 months ago. Or 2 weeks ago. You think you can? What?
Is it going there and coming back?
Didn't I say that, going there and back? I just know I'm bringing it to yes, and that's my way of being snide, but it helps you remember. Okay? Sorry, it works. It absolutely is there and back. And all too often I'll say, what, you're going to walk back? So of course it is, okay? You're about to say, well, what if I go to another location? That's exactly how the IRS would like you to write it down. But I think I said from your home to this location, it's easier. And the mileage is not all that great so that the IRS is going to deny it. All right? So you're off the hook. You at least have a starting place and an ending place. Then you just have to write down where you went. And you'd be shocked how many times people don't do it. How hard is it? You have the record. All cool? What are the odds different for mailing and a return versus electronic filing? There was a time when I would say mail it, and the common thought was mail it later in the year because maybe by then they have selected who they're going to audit. In today's world, though, most returns are e-filed. That's what by the web. And therefore, you want to be part of the minnows. All right, there's a reason fish swim in schools, and that is because they're not going to be singled out. So I would urge you to e-file and not be afraid of e-filing. Once your information gets into the computer is going to spit it out if it thinks you're erroneous, okay? Even if you mail it in, it's going to be typed into the computer. And once it's in the computer, if they want to audit you, they're going to audit you. With me? Yep. Following up on that.
Is there a better time to submit that electronically?
Is there a better time to submit it electronically? Who cares? Once it's in the computer, if the computer thinks it's out of sorts, it'll spit it out. So my answer is always try to come in as early as you can, because if you're going to get a refund, you want the money in your pocket. It amazes me that we probably do a third of our business in the last 2 weeks, April 1st to April 15th. We're swamped. And if we need to spend more time with you, we can't. Now, if we know you're going to get a refund, we'll say, would you mind waiting until after the rush and come back in so we can do what we think we might need to do here? I really need the money, Chuck. I really need that money. Well, if you'd come in back in February, you not only would have had the money, you'd have spent the money. All right, so try to come in as early as you can. What flags an audit? I think we covered that, wouldn't you say? There are some things like home office. There are some so-called flags. But the real key is actors have huge miscellaneous deductions, and that's what causes actors to get audited. The chances are probably pretty good that if you pursue this career for 20, 30 years, oh my gosh, I've forgotten his name, and he was in one of my favorite movies. We've talked about this. How long have you been in the business?
Me?
Yeah.
Oh, man. I like to tell people I was doing scenes with Moses on Noah's Ark.
Okay, there you go. But Moses wasn't on Noah's Ark. Noah was on Noah's Ark. Okay? So clearly he was doing the wrong scenes.
Over 35.
Have you been audited?
No.
Oops. Find the wood. But in general, I would tell you, the chances are pretty good you're going to get audited. And he was in one of my favorite movies, and I've told him that many times. What do audits have? Why do audits have a lag time? If you're audited in the first year of filing, you've got some real serious issues. And I've actually heard of a couple of people getting audited that way. The situations where they've decided to throw out a preparer's entire client list and audit them, I've heard of that happening for sure, maybe 5 times just in the LA area. They'll usually do that in the first year because they've been planning this for some time. But generally, you're going to be audited. You can be audited within 3 years of your date of filing. All right? They're allowed to come after you. What if I filed my 2010 this year? Then it's 3 years from now, not 3 years from the 2010, or 2011 would be the date, okay? They have 3 years, they'll take it, and they're backed up. Receipts fade over time. Wonderful statement. They do fade over time. I actually had one auditor tell me that he'd rather have those little pieces of paper that comes out of a gasoline the stand or whatever it is, than the credit card statements, because anybody can take your credit card and use it and pay for their own gas, but I want that piece of paper. And I went, you mean the ones that fade? He and I weren't hitting it off, and he had been a drill sergeant, and he was ready to call, you know, do you want this man representing you anymore? Because if he talks like that again, he was called on the bluff. It's ridiculous. If you keep them covered, they generally won't fade. You put them in the sun, they will. So if you leave them in the envelope, you're pretty safe. Or you could scan them. All right? And they've got some great scanners out there, and any number of printers today are scans. I was going to brag about the scanner I just bought today. Really neat. Receipts fade over. I already got that one. What was the $75 receipt again? I don't know. What did you put it down for? Or what is it recovering? If you have, that's what it says. What was the $75 receipt again?
No, you said something you could write out a receipt, $75.
That's fine. I understand. I'm going to cover it again. I just wanted to clarify with everybody. It's, again, my snide way of making my point. If I run into Office Depot and I get 100, in the old days, 100 resumes copied, and it's $8, and I come running out the door and I go, I forgot a receipt. If I take one of those and write on the back, $8, today's date, Office Depot, that's a valid receipt. Okay? If I take an acting class with that marvelous theater coach, Chuck Sloan, and Chuck charges me $65, and I walk out the door and I didn't get my $60, if I have a piece of paper, his brochure, if you will, Chuck Sloan, $65, today's date, that's a valid receipt. Important thing to remember. You have an acting class with Chuck Sloan. Like that's going to happen. You have an acting class with Chuck Sloan. Who the heck is Chuck Sloan? The chances are pretty good in today's world that Chuck Sloan's going to have a website as an acting coach. So on occasion, it might not be a bad idea to go to that website, download some of those pages and print them out so that you can have the receipt to Chuck Sloan for whatever you paid. And look, Chuck Sloan is in fact a legitimate acting coach.
You don't need a signature from Chuck Sloan?
You need yours, but you don't need Chuck Sloan's. If you had Chuck Sloan's, then it would be called a receipt. All right, I'm not being a jerk there, but it's not a bad idea to go back to Chuck Sloan and get a receipt on his paper, but $75 or less, that's considered a legitimate receipt. Amazingly, correspondence offices will often say, send us all your receipts, but leave out the ones for $75 or less. Okay, but then I have seen them say, I'm sorry, we're disallowing $3,500 because those were for the receipts that were for $75 or less that you didn't include. But, all right, I hate correspondence audits, in case you had a question about that. Did I answer it? Okay. Was it $75 or less? $75 or less. All right? If it's travel, you need to have, this $75 rule doesn't apply. If you pay for time, okay. If you pay for time, if you pay for lodging, then you have to have a receipt from the hotel. when you travel. You can have it for meals, that's fine, but for, and tips and anything you might, other things you might have bought. We got one back there real quick.
Just a follow-up question on documentation. Back in the day when we put money into payphones, we used to put them in the daily planner.
If you have one of these data, bring it up here, which we could real quick. If you have a daily planner or a log of some kind that you're writing it all out, the IRS loves these things. This, okay, this is for contemporaneous notes. If you, sorry, people over there, I just rubbed on the microphone. Contemporaneous notes. This is golden. If you've kept a logbook like this that's stained and dirty and filthy and you're embarrassed, I've actually had people come in and go, I'm going to rewrite it because it's so filthy, it's ugly. No! Keep it this way. This shows that you made these notes at the time that you spent the money. If you have, you're going to write off that $65 to the acting coach Chuck Sloan, but you have a schedule that says meeting with Chuck Sloan for acting coaching. That backs up that receipts. All right? The more proof you have, the better off you're going to be. But who does this anymore? You generally have this in your phone. So I'm going to argue, periodically download that phone to a file that you can save. If you want to get fancy, print it out. Thank you. Print it out and mail it to yourself periodically. It's the cheap man's trademark or whatever, okay? Don't open the envelope. But what you're now saying is, yes, I put the stuff into my phone. Now, the reason the IRS doesn't accept those kinds of logs or the computer receipts I talked about is because you can change them the day before you go into the audit. So print them out, mail them to yourself. There's your proof. And you go into the audit and you say, here's my log in my phone. Well, that won't work, sir. Well, let me open up these envelopes that have a postmark to verify that what I'm telling you is the absolute truth. A way of doing it. All right? New questions. They just came up here. If you've already been audited, is it true that the IRS cannot re-audit you for another 7 years? If you've been audited and you lost, the chances are you're going to be audited next year, and the next year, and the next year until you no longer owe them money. Gentleman came in a month ago. He's being audited for 2010. He just finished an audit for 2009. He'd done his own taxes on TurboTax. He didn't understand what was going down. He kept saying, yeah, I got that. Yes, I've got that. And he ended up putting down $49,000 worth of deductions on $106,000 of income between he and his wife. Can't figure out why he got audited. But last year he did a similar thing and they ended up owing $6,000. So obviously the IRS said, well, if you did the same thing this year, we got a target. When we added up all of his actual receipts again, he didn't even make the standard deduction, $12,500 for him. So he owes another $5,000 or more. All right? So the answer to the question is you can get audited and audited and audited again. And if you have not declared income, they can go back forever. All right? Is it true that you can only deduct the money spent on wear and tear of your vehicle used on a camera or mileage from your car? No. There are two ways of writing off car deductions. We're not here to talk about that. One is mileage and one is all your expenses multiplied times the percent of business use. We're not here to talk about that, but if you go to the website, you'll see how we kind of break it down and try to explain it. Is it true that you can't deduct both? You cannot. You're always going to have to be able to prove your total miles and your business miles. If you're using what are called actual expenses, that's all the gas, all the cost of the car, all the repairs, all the insurance, et cetera, let's assume that's $6,000 and you're claiming you drove the car 30% for business. How much do you get to write off? $2,000. You with me? But if that 30% of driving for business was 5,000 out of 15,000 miles, then 5,000 times 50 cents a mile, and it's really 55 cents, but I'm going to make it 50 cents because I don't want to do the math on 55. 50 cents would be $2,500. So which would you rather have, the $2,500 or the actual expenses? Say $2,500. Very good. They got it here. So, but you can't have both. All right, that was yours? You're so proud of you? That was my question, okay. If I get paid less than $500, do I need a 1099 form, or if I get more than $500? It's $600, all right? If you get paid $600 or more, your employer or that whoever you worked for is supposed, they're not technically your employer, whoever you did the work for is supposed to send you a 1099. They don't always do it. More importantly, you don't always get your copy. So if you don't get your copy, that doesn't mean the IRS didn't get their copy. But the truth is, it's not $600 or less, I don't have to report it. If you made $10, you're supposed to report that income. The IRS wants every dollar you made working for someone. All right? So the $600 rule, or whatever you thought was $500, is not valid. If you made $1 doing some work for someone, the IRS feels they're entitled to a cut of that. And quite honestly, depending upon how much W-2 work you may have done as an actor, being able to report some 1099 work as an actor can be very beneficial for you. And I'll leave that hanging out there for you to deal with Chuck Sloan next time. What was the $43 for in regards to the payment plan? Oh, I'll have to go back. I guess I can't. $43, I think, was the amount that they'll charge. Oh, if you're not too well off. If you don't have any money, they're not going to charge you $105 to get in a payment plan that they want you to be paying, so they'll only charge you $43, but then you have to prove that you can't afford to pay it. That answer that? What? Go ahead.
Oh, question.
Of course.
If you file an extension,
if you file an extension,
and you know you're not going to need to owe too much, or
and you don't think you're going to need to owe,
are you more apt to get audited than if you file an
okay. If you don't owe anything, and based upon your standard deduction and your personal exemption, and you don't owe anything, you don't ever have to file. But you're giving your refund to the IRS. All right? Do you need to file an extension then if you don't owe? No. You need to file an extension if you think you may owe, but you don't have all the paperwork that you need. Now, if you file an extension, you're responsible for paying more than enough money, or at least darn close to it, of what you will be having to pay. Arguably, the IRS has the right to throw out the extension you may have sent in if you didn't make at least up to 90%, payment up to 90% of what you eventually owe. Now, they usually don't, but I'm letting you know what the rule is. If you think you're going to owe, file the extension. It usually gets you out of the late filing penalty, but not always. I've seen them come after people who owed more than that 90% that they paid in, if I'm making sense. You think you're only going to owe $700, so you send in $800 with your extension. All right? The extension is for the paperwork only, not the amount of money you owe. Misunderstanding in the entire world. So let's assume that you send in $800 for what you think is a $700 debt, but you don't have all your paperwork yet. Now all of a sudden you find out you owe $1,100, but you've only sent in $700? Was it $800? Sent in $800? Now you're less than the 90% that you had to cover, and technically they can still consider this a late filing penalty. And I've seen them do it now, because the computer's pretty sharp. Give them more, and as soon as you get your paperwork, file your taxes, you're going to get your money back within 2 weeks. Until October 15th, and then you can't do any more e-filing, and that's it. Is there such a thing as a targeted for audit? For example, for 5 years in a row, even if there's nothing wrong for the later 3, is that person here? All right, is there such a thing as a targeted for audit? For example, for 5 years in a row, even if there was nothing wrong I think what this person is saying is that out of 5 years, they got nailed for the first 2 years, but they're being audited for 3 more years. All right? The chances are pretty good. Yeah, you might be on the bad person list and you could be audited, But if you have a no change because you've done your taxes properly, they're not going to come after you again. So even though you may feel there was nothing wrong for 3 years, they found something. And that's the reason they're auditing you for all 5 years. So once you're on the bad list, do your taxes properly, and you can then get off the bad list. All right? All right, I think, I'm going to check my time. My God, 9 o'clock. Thank you, everybody. Thank you.